People are chomping about the bit to know which way the market is going, and I think I have some insight for you. Check it out. The technicals that I have and the commentary, SPY, QQQ, and probably the most interesting out of the three charts, at least in my opinion, is IWM. And I'll share with you exactly why I think that is in this video. So let's get right into it today. And so as you might be aware, at 8:30, we have non-farm payrolls coming up and also the unemployment rate. We might find out that the concern that we see in the market for that economic weakness, for that GDP information that we have coming out, it turns out that there's a little bit less to worry about because the labor market's still strong. Maybe this is just a hiccup. And I've talked before in my videos about the 4 pillars that I think it's going to take to prop up the market. So we want to be watching for that. You can see the market drew us down to the 200-day for the S&P, closing just above it yesterday, and then it bouncing just a little bit in the pre-market hours. Pretty meaningless until about 8:30. And we'll see when you're watching this video. You can see how that commentary plays out. If we get numbers that surprise to the downside, maybe because of DOGE, the Department of Government Efficiency, and infringing upon the number of government jobs that are added, if that's something where instead they either get subtracted or just not really hired for that strongly, that can be enough that might be able to influence the results that we get. We're going to have to watch and see. And then the unemployment rate is that other big one, 4% right now, but we got to watch for 4.1, 4.2. It'd be concerning if we jumped right to 4.2, stopping by 4.1. With the overall narrative, maybe it's not that great. I don't know that it's something that absolutely would crush us. It's when we start to get to 4.3 and higher as the months go by where we really want to start to get worried. Now, this is the daily chart, but if we go out to the weekly chart, I'm going to show this to you as well. This is the S&P tracked by SPY, and the last time that we came down to the 50-day, which is this pink line, 50-week, which is this pink line that's right here, goes all the way back to October when we had the most massive sell down, and you can see how we've roared since October of 2023 during that time. And so this could be an area where we find that bullish bounce. For a while, we've been riding the 20. And so if we do happen to get drawn down to the 50-week on this, which is about 563, then we should be watching that for an area of bounce. I've been talking about this bearish divergence for a while between the prices rising and what we see with the momentum falling on this. So this is something that maybe there's a bigger sell coming in. We're going to have to watch and see. It's going to take that big news event. It's going to take some pillar crumbling, whether it's GDP or monetary policy or inflation or labor market. Something it would take in order to crack, or some big narrative to really start playing out or show further evidence to push us down below that 50-week. So we absolutely want to be watching that. When we go over to the Qs, we're already down below the 200-day on this one, closing yesterday at 488. Recovering just a little bit in the pre-market, but like I said, 8:30 is going to be that telling time where we should be able to glean a little bit more information about the direction that follows. So we want to be prepared. Will we hit our heads off the 200-day, find resistance, and then sell down further? Or is it something where we're going to break back up through it, and then it's going to turn out to be just a very big rallying moment for us? That's something we want to watch out for. The 50 and the 20 days, which are the pink and the blue up at the top here, the fact that they're both sloping negative, not great. They've done it before, and now they're doing it again, but this time with a double top at their back. So we want to be watchful for that as well. And if we were to track that double top, let me actually get rid of all my my old technicals, and let me just draw this on here for you right now, is that if we just go from this top that we have right up here on the Qs and then go down to that bottom and then come up to this top, what you can see is that we've already sold down below this full decline that we had back here going from December into January. Well, right now it's from February the 19th up until now. We've actually blasted down past that amount. And the 1618 is that next big number that we're looking at, 476.98. If we go out to the weekly chart on this, and I'll delete off that Fibonacci extension there, we are actually at 484.52 is where we find that 50-week. Let me zoom in there for you so you can see this candle coming down to this pink line right here. That can be massive support for us. If I zoom back out by resetting the view, you can see the carry trade day was the last time that we were down this low relative to the 50-week. So that can be pretty important for us in terms of bouncing. Breaking down through here and finding resistance at the 50-week, it takes a lot of downward pressure to see that 200-week happen. As a matter of fact, that would be, like, in my opinion, the sign of incredible opportunity after incredible pain. And you can see evidence of that going back here to what we had for the pandemic. Look where things sold down to before that rally that followed. And then what happened over here with 2022 when we broke down beneath that? Well, yeah, we fell down below the 200 week, But man, look at the run that we got that followed that as well. So if we broke down below that 50, we still have some other peaks, some other supports along the way. We absolutely would be watching those. But if we were to have some sort of disastrous event bring us down to the 200 week, the market, I think, would flip on its head, flip on a dime, and really start to turn things back around on us. At least to me, as I look for how I would be setting myself up, how I would be positioning, that would be that next incredible time. I think right now already is setting us up for one of those big moments where we could see that big bounce, a big recovery, and then it's back to contending with the 20-week that we have recently started to trade below. So it's potential. There's a lot of potential right now that we actually find that spot for bouncing from where we're at right now for the Nasdaq 100 after this correction period that we've already gone through. And while we have labor reports today for non-farm payrolls and unemployment, but then we also have inflation reports to watch, we need to watch evidence of those pillars, how they're setting themselves up for propping up the markets. And if those pillars crumble, that's where the market starts to tumble. Once again, those four pillars: strong GDP, which that's being infringed on right now, low inflation, that's being pretty sticky on us right now. So that's some of the sell down that we see. And then after that, when we talk about labor market, well, that's today's reports that you see as well. And then easy monetary policy is the last thing that we really want to examine there. And we really, if it comes down to it, really forcing the Fed's hand to return to an easy monetary policy type stance, that cheap borrowing, if you will, watching for pressure on the Fed to see that happen. The market might be waiting for that to happen if we do continue to sell down, and that would be incredible. All right, let's wrap things up with IWM. I said most interesting chart. What's most interesting? Well, 20 down over the 200, not great to see the faster moving averages cross over the slower moving averages. That can be a bearish thing. And I said this would probably take it the hardest out of the S&P, out of the Nasdaq 100, and that here the Russell 2000 stocks tracked by IWM. This is the ETF for it. Well, out of all this pain, what the heck are we watching for? Well, go to the weekly chart, and here's where things really start to get interesting. Now, mind you, we're just north of the 200 week, which that 200 week happens to be right at about the $200 mark. So a nice round psychological support as well. And if I zoom out a little bit more, and let me bring that more to the center of the screen here, and I'll even bring a little paintbrush, and I'm going to go a little bit Leonardo da Vinci on you. There we go. Actually, let's delete off those other technicals just so it's not crowding up. And here we go. Cup, handle. Now, mind you, not a confirmed pattern, because what we want to watch for, if we are going to get that cup and handle to play out, we actually want to look for, there we go, this part of it. This is the trend line that you want to watch and see. If we're able to break back up above that, that's where the fun really begins for the Russell 2000 stocks. And it is possible that we're getting near there. Now, mind you, those pillars that I talked about, those are the things that you're going to watch for. They're going to speak to that strength. The market is going to anticipate it before the rest of us at the retail level get evidence of it. So we want to watch these technicals, watch for these early signs. And if you guys want to know just exactly how high this thing's going to go, well, what we can do is we can grab a horizontal line and slap it across the peaks of this thing. And you can see those are really even lips of this cup for this cup and handle pattern. That, once again, it's a potential cup and handle pattern. We don't know that yet, but all we have to do now is just go from top to bottom on this. So let me turn off the magnet because that's going to mess us up. And I'm going to click the top of this thing and go down to the bottom of this thing. Hold down the shift key instead of caps lock. Perfect. So that is what we want to copy. And what we want to do is we want to look out for the breakout moment for that. So if I were to paste this line, and we'll just say that maybe we take a while to get there. We'll drop it all the way down here, although you place this wherever that breakout happens. When you do that, where does it put us for those Russell 2000 stocks? Well, if we just look from that lower breakout, that puts us up at 288.95. And from where we're at right now, that's really strong. That's like a 40% climb from where it's at. So this is a weekly chart. This could take several weeks to play out. If it plays out at all, there could be some pain that happens between now and that point in time. If it does happen to be activated, if it does happen to be confirmed, watch for the break above this trend line to see if we get that cup and handle pattern playing out. And if we do, we can see some pretty wild performance. Hello, Benjamin. If you hear my cat in the background, say hi to him. He's Benny. He's kind of a pain in the butt, but I love him anyway. So, guys, let me wrap this thing up here. We have some reasons to be doubtful in the markets, but we need to be looking ahead to the opportunities that could be coming. We could actually be in a really opportune zone right now, And even if we're not in that opportune zone right now, we could really start to look for that outperformance if things get a bit worse from where we're at. And I'm going to keep on coming back with the technicals. I'm going to keep on sharing them with you. And guys, I'm not the only one who's doing this. As a matter of fact, over at the Discord, there's a panel of experts where you can go and you can look and see. That link for the Discord is down in the description, and you can save an extra 50% when you sign up by using the code word CASH. So look for that down in the description. And if you guys want to learn about technical analysis trading, learn to do what I do in the markets, there's a link for Stockmo Academy down in the description. Click that, sign up using the code word doctor. It's going to give you a massive discount on those courses. And when you join that discussion over at the Discord, you're really going to have an in-depth feel for what exactly everyone's talking about and see what exactly they're so excited about, along with all the posted wins that you see over there as well. It really is a good time. It's a vibrant community full of thousands of members and just updates every day from just so many contributors and so many people who are part of that community, who have joined that community. And just come on over and be part of it. We'd absolutely love to have you there. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.